If you're not investing in Canada right now, I think you're missing out. There are fantastic opportunities here in Canada. There are some really big warning signs for a lot of other markets, and there seems to be a global trend pushing Canadian stocks much higher. Welcome to Golden Arch Investing. My name is Liam. On this channel, we talk about investing in Canada. If that interests you at all, please do like the video and subscribe to the channel. Now, today I'm going to talk about why I think the next 5 to 10 years, the Canadian market is going to outperform the global markets. And specifically, when you're usually talking about this, I think Canadian TSX listed stocks are going to outperform the S&P 500, the NASDAQ, the Dow Jones, those sort of global investment benchmarks that most of us in the English-speaking world, at least, think of as being the norm. Now, most investors, even those of us living here in Canada, have most of our money in things like the S&P 500, in these big American tech stocks. But there seems to be some opportunities we've missed out on. While the last 10 years have been great for everybody investing in the US, the next 10 years might see some different dynamics totally shift the market. Today, I'm going to show you an article from Seeking Alpha. It's actually over a year old that covers some of the things that have held Canada's market back. I'm going to talk about why over the last year, a lot of the market momentum has shown that things will change and that these outperformance icons, these things that have pushed American markets to outperform Canadian, are not going to carry forwards through 2025 into the next 10 years, all the way through 2035. So I've got the article right here beside me. XIU, Canada's market lags the United States for good reason, but it won't last forever. XIU is the iShares S&P/TSX 60 Index ETF. It basically covers the biggest 60 Canadian listed stocks, so stocks listed in the TSX, and it has dramatically outperformed the S&P 500 over the last 10 years. If I go through the summary here, we've got a couple of charts I think are really interesting in this stock. This shows you basically the last year as a publication. This article came out in April of 2024. Like I said, it's over a year old, but it shows you that over that previous year, there was a short period of time where the XIU was ahead. Basically, the whole rest of the time, the S&P 500 beat it, and it underperformed. Canada underperformed the United States in this time period by 20%. You might be thinking, okay, well, that's just 1 year. What happens if you zoom out more? That's this next chart right here. Again, you see there's a short period of time where the Canadian market does outperform, but then it gets a lot slower, and the US stock market outperforms it by 120%. This is, of course, the law of compounding. Small percentage gains every single year are going to add up to huge advantages for that American index. But I still think things are going to change a lot. And if you looked at the last year, you would see that the Canadian market has actually done pretty dang good, for a couple of reasons that we'll talk about as we go through this article. So basically, the whole start of this is talking about the fact that the US market has outperformed. And here are the 3 reasons that the author gives. I think they're really interesting. First, relative weighting of technology within the US and Canadian markets. Now, if you're not familiar, I assume most people watching this are, but Canadian market's basically banks. We've got some telecoms in there. We got energy, we got materials, and then we got industrials. That's basically the Canadian market. The US market, on the other hand, has the Magnificent Seven. It's got these gigantic tech multinationals. NVIDIA is what, $4 trillion? That's larger than the GDP of Canada. So obviously, American tech dominance has really led the S&P 500 higher. Canadian markets have a lot slower growth businesses and depend a lot more on commodities. Why do I think that's actually a good thing? Well, of course, as an investor, you would have seen that over the last year or so, particularly this first 6 months of 2025, we have seen commodities actually start to outperform. The big ones, gold. Gold has been killing it through the end of 24 into 2025. Basically, the whole time since this article was written, gold started to do fantastic. Particularly, we've seen a lot of central banks buying into gold, but we've also seen a lot of investors around the world put a little bit of money into gold because of all this fear and uncertainty around things like the US dollar, around things like the global trade order, around all these international conflicts, around the idea that maybe your assets aren't safe if they're just dollar denominated. You've also seen a lot of people stepping away from the markets thanks to sky-high valuations. One of the things that tech has brought to the US market is an increased overall premium that you pay for the S&P 500. Now, I should know, the S&P 500 is still, to this day, my largest individual position. It's about 40% of my portfolio that is in the S&P 500. But you have to admit that the multiples you pay now, thanks to these fantastically profitable but also high-flying tech stocks, is a lot higher than it was a few years ago, a lot higher than it was 10 years before that. So compared to historic norms, S&P 500 is a little richly valued. TSX, on the other hand, not quite as much. Now, some of those sectors that we talked about, some of the gold miners and those that have already started to run over the last year have seen their valuations extend. But the overall market has kept pretty low valuation. It's pretty cheap. And honestly, if you look across the TSX, if you broaden your view a little bit, you'll see there's a lot of very cheap companies. And one of the things that bind them together is their exposure to commodities. One of the biggest markets that I constantly talk about on here is the Canadian energy market. You might be questioning, well, why would that matter? What does the Canadian energy market, the Canadian oil and gas stocks have to do with any of this? Well, they have seen their multiples cut out from underneath them by a variety of international trade disputes, by OPEC raising the amount of supply, by the idea that oil and gas is no longer investable, and the idea that they're going to be out of business in 10 years. And yet, we have seen global underfunding of new energy projects, which means that these Canadian assets that are typically really expensive to start and then have a great long-term return are all of a sudden going to be more valuable in 5 years than they were 5 years ago. The same can be said for all sorts of other Canadian commodities. Canada has fantastic access to all sorts of minerals. We've seen that story start to play out in 2025, seen a lot of discussion about investing in that space. I think you're going to see the actual reality come true over the next 10 years as these commodities become more valuable. And I am far from the only one. I've seen many times over the last couple of weeks particularly talk about a new commodity cycle. With gold already running up, and gold usually being the first commodity to move big, you've now started to see things like silver and copper start to move up. If you see a continuation of that trend, then all of these Canadian mining and mineral stocks that aren't just gold miners are going to see a huge boom. And of course, when you see a huge boom in those sectors, those industries, that brings a lot of money into the economy, brings a lot of money into those companies. They then have to do things like build expansions. They then have to do other activities. Maybe they're paying out higher dividends, whatever it might be, overall does boost the TSX. So yes, tech dominance has been fantastic for the Americans, but commodity prices rising could bring a huge benefit to the TSX specifically. Obviously, you see here the financials in Canada are pretty great. They have outperformed, but again, I think it's really about these material stocks. You've seen them, they've already done pretty good, right? The last 5 years before 2024. But if you looked at that chart today, it would be a completely different story. Energy stocks, same kind of thing. Some of them had been doing good going into this. They haven't done quite as great over the last year. But again, that underfunding seems to be setting them up for success over the next 10 years. So with basic materials making up 8% of XIU and only 2% of SPY, energy making up so much, 17% of XIU, only 4% of SPY, if you see those commodities start to move, you're going to see the price of the Canadian stock market increase faster. So I'm going to go down a little bit. Reason number 2 that this author thinks Canada's stock market has underperformed, and it's thanks to Canada's real estate market. Now you might be wondering, okay, what is this crossover episode we're doing right now? Why are we talking about real estate? It's not really something we've talked about here on the channel, mainly because for a lot of us, we're normal retail investors here. A lot of our real estate assets are just our homes. But as a young Canadian, I can tell you firsthand, house prices have exploded over the last 10 years, even longer than that, honestly. It's been crazy over the last couple, 15, 20 years, basically, since the financial crisis. And the last 5 have been insane. Now, I'm a pretty lucky person to be living in a part of the country where things actually aren't quite as insane, but I have lots of friends and peers around the country who cannot invest their money into the markets because they are so trapped in their housing expenses. Be it paying hugely high rents, be it trying to desperately afford a mortgage, they are caught in that story. But we're not the only generation caught up in that story. I want you to think about what has happened in the Canadian housing market since the middle of 2024. There's all sorts of stories we could talk about, but the big one that we've talked about here on the channel a couple times is the condo market crisis, I'm going to call it. Midway through 2024, this is Q2, this author wrote this, was just about the last moment before you started to see the condo market come off a cliff. Specifically, we're talking about what Ron Butler refers to as dog crate condos in the Greater Toronto area and somewhat in the Vancouver area. These two large Canadian English-speaking metros that basically saw a gigantic rush of investment in that sort of 2018, 19, 20 era, where people were looking to move into these cities, get access to these higher paying jobs, specifically things like they're going to work in tech, they're going to work in finance, and they're willing to pay a huge price for a condo in one of these new towers in these cities. The problem is that a lot of people signed up for those purchases when interest rates were at 1 or 2%. Interest rates obviously exploded upwards in the following 5 years, and by the time they started closing on those properties, they couldn't afford them. A lot of people started stepping away, the prices start to drop, buildings weren't able to fulfill the promises they had made to their lenders, basically the banks essentially. And there's this sort of snowball effect. We've already seen some minor lenders, particularly in British Columbia, start to go bankrupt. We've already seen a lot of individual investors wiped out. Because if you took out, let's say you're trying to buy $1 million condo. Let's say you put 5% down. So you put that money on the table, that $50,000 on the table. You made that bet, you leveraged yourself, you were ready to go. The prices can just keep going up. And then all of a sudden you saw, well, okay, rents aren't where they need to be for me to afford this. Interest rates are too high, so now my mortgage is too expensive. I can't afford to buy this. Oh, and I've taken a $200,000 loss on this property. A lot of Canadian investors were wiped out by this. And yes, lots of those people might have had enough money where they were, investing in the stock market anyways, but not all of them. And that has definitely drained a huge volume of money out of the Canadian market. But with this crisis happening over the last year, you've seen a lot of people turn away from investing all their money into real estate and turn towards investing it in the stock market. Now, lots of those folks are going to go and buy the biggest name stocks. They're going to go out there, buy the Nvidias. They're going to go buy the Microsofts, the Apples. They're going to go find the high flyers, right? They're going to go find Palantir. They're going to go find AMD, right? All these stocks that retail love. But some of them are going to turn to Canada's stock market. And you're going to see more inflows from the average general public. We've also seen big stories about things like Canadian pension funds and Canadian banks allocating more money to the Canadian markets. There have been some other storylines playing out in this space, but essentially, since this article was published, since this author talked about Canada's housing market drawing money out of the Canadian stock market, you have started to see a significant change. One of the other changes, of course, different government, different immigration laws. That's not really an argument I want to have here, right? We obviously don't know exactly how that's going to play out and how much are you going to trust that things go the way that they've been promised, right? Obviously an argument lots of people can have on other forums, but has started to have an impact over the last little bit. And I'm talking like a couple months. Now, if that plays out for another year, could have a significant impact on the general housing price. Whether or not that benefits Canada's stock market, we don't know. But we've already seen that the condo crash has turned a lot of people away from that kind of investing. So maybe if we see housing prices return back to more normal in some of the hyperinflated markets, again, that Toronto, Vancouver areas, but even some of the less inflated markets, right? Other Anglo-speaking cities, even Montreal has had some big house prices. So if you start to see that start coming down, cooling off, prices are down 5-10%, I think you're much more likely to see people putting their money in the stock market versus trying for that next, 100-200% run up on the price of their home. Reason number 3. This is what I've been talking about on this channel basically the whole time. Canadian investors like to invest in the United States. Most Canadian investors own American stocks. That's not just me guessing. The most popular ETF in Canada is VFE, which is an S&P 500 ETF. It's very obvious why. Canadian investors like to invest in the United States because American companies provide better returns. But I think 2 things have changed since this article was published. Number 1, the tariff drama. There's been a huge amount of Canadian patriotism, sure, but mainly just anger towards the United States in the last year. You've seen a lot of people turn their investments and their spending patterns away from American companies thanks to the tariff drama. Do I think that's a lasting force that's going to dramatically shift markets? No. But the second thing will. And again, that's the commodity supercycle. As we see gold start to rise, we have seen more Canadian money flowing into gold stocks. Again, this is not speculation, it's simple math. We have seen as the ETFs have reported inflows, that Canadian ETFs have reported greater inflows. We have seen the prices of Canadian gold mining stocks just shooting through the roof. One of our favorites here on the channel, Agnico Eagle, has seen a fantastic year-to-date result. And a lot of that money is coming from Canadian investors, be it through institutions or just as individual retail investors like you and I. With that money flowing in, you're likely to see the next sort of round of commodity stocks spark a similar idea. As you see more investment in the infrastructure to build things like critical minerals, as you see more of these companies start to sort of report some more positive earnings thanks to increasing commodity prices, you're going to see money chasing those results. Once you see that a couple times, once you see maybe 2-3 different parts of the TSX start to move, all of a sudden, you're going to see the TSX start to outperform the S&P 500. We've already seen this through parts of 2025. And again, the biggest reason Canadian investors have invested in the United States is because the US has been outperforming. But when Canada starts to outperform, it's a much smaller market and it can move much faster as money starts to flow in. I think the cherry on top is going to be what happens maybe 5 to 10 years out when you start to see significant underinvestment in global commodities, specifically energy, start to hit. And all of a sudden, Canadian stocks that have some premium assets in this space. Think about the uranium opportunity here in Canada. Of course, the oil and gas opportunity that we talk about a lot. Think about the opportunity for renewable energy. Think about the opportunity for new critical minerals. Think about all the copper we mine here. There's so much going for Canada that you're going to start seeing money chasing the results. And that means that over the next 10 years, I think that Canada's stock market is going to outperform the US. I'm going to take you guys through the conclusion of this article because I think it's really interesting. This author, remember, wrote this over a year ago, expects mining to outperform technology in the near term. That did happen. Absolutely true. Now, did it outperform maybe the highest flying individual tech stock? No. But the gold mining sector specifically killed it. And we've started to see other metals move as well. XIU is relatively overweight to mining and underweight to tech. This will cause a close some of the gap. Definitely happened. We saw XIU actually outperform for parts of 2025 already. In the longer term, they're optimistic that Canada's tech sector will become more robust. I think the part of Canada's tech sector is going to be more investments into Canadian critical minerals, Canadian like clean energy, maybe Canadian copper mining. I think that part of the technology world, the picks and shovels, I think Canada does better. I see positive signs in the startup and university graduate level. Sure, tech and productivity must improve. How is productivity improving? Well, you're making it easier to invest in Canada. How do you do that? Well, we've seen some policies start to get out of the way of investment. We've seen obviously some big government spending coming in. So that could be really interesting. Period of easy money that has been made. Canada's real estate market, thanks to government policies and the macro environment, may soon be coming to an end. I think it is coming to an end. I think we've seen that in condos since this was written. I think we're likely to see it in individual single family homes. And as investment in real estate no longer becomes risk-free, I expect money to flow out of that and into the stock market. We've seen the very beginning of this. I think we're going to see it accelerate through the second half of this year and sort of more broadly through the next 10 years. Money could flow to international rather than domestic, but if the country starts to show itself as a preferred destination for these dollars through a commodity supercycle and improving productivity, the issue can be overcome. And I think it absolutely has shown over the last 6 months, let's say, that Canada has the potential to be probably the best investment opportunity of our lifetimes. Canada is undervalued relative to the US. It has access to so many really interesting opportunities, different commodity sectors, different energy sectors, different mineral sectors. It has so much opportunity over the next 10 years, and we're finally starting to see some real investment flow in. If we see the same things that played out over the last 6 months play out over the next 6, 12, 18, 24, 36 months, I think you're likely to see the TSX outperform the S&P 500. And I think those of us who have been investing in Canada, who have set up our positions, who have been paying attention to these stocks, who have found the opportunities, are going to make a lot of money. Now, I'd love to hear what you think in the comments down below. If you watch this video, you're probably already a Canadian investor. You're probably already interested in Canadian stocks. What sectors do you think give Canada opportunity to outperform? And what areas outside of Canada do you think most investors like me need to hold on to in order to make our portfolio more diversified? I know I still own a big chunk of S&P 500 because I know that as I invest into Canadian stocks, I need some access to that big tech world. I don't want to lose out on that opportunity. What other sectors do you think you should be looking at? Be it, European, Asian, emerging markets, wherever you might be interested, what sectors do you think we should touch on? And as always, if you like this video, please do like it. If you like what we do here on the channel, please do subscribe. Talk about videos like this just about every other day here on the channel. So we really appreciate it. And as always, I hope I see you in our next video.